Welcome back to the channel, guys. Click like, subscribe for more content. Now, in this video, we're going to actually go over your 5-year business plan or your five-year financial statement that you're going to need for your business plan. We're going to kind of run it down, and then we're going to also talk about a balance sheet that you're actually going to need for your business plan. Now, I decided to combine the two instead of splitting it up into two separate videos, because I think they go hand in hand. And if you do a business plan, you are going to actually have these separate, but just for the purpose of this video, we're going to do it one step by step and together, just so we don't have to go through two separate videos. Okay, so first of all, we're going to start with the 5-year plan. Now, the 5-year plan is what I have up here, up top here. So what you want to do, you can use a Google sheets, or you can get your own uh, business plan sheets, or you can just basically just graph these here. So you want to go with your revenue. If you're in product-based business, your cost of sales, profit margin, research and development. Now, mainly your research and development is going to be if you are producing a new product or a new line within the first 3 to 4 years. Now, mapping it out for 5 years, if you're in the sales or service-based business, you're not going to be spending that much on research and development. So just for that, sales and marketing, general administration, administrative, if you have an employee, anything like that, operating expenses, if you have a building, stuff like that, depreciation at 20%. If you have a building or you have depreciable assets such as like a printer or anything like that. Finance costs if you got a business loan. And if you're going for a business loan, you want to make sure you do have a finance cost there. The income before taxes and then after taxes is at 20%. Net income is the final thing. So year one is the most important year as far as your expenses. Now, cost of sales or your revenue is how much money you're actually bringing into the business here. So, uh, what I like to say is, as far as revenue, also work your salary or your employee salary inside that revenue. Okay, and then the next section it'll be your cost of sales. Your cost of sales. So, if you're in a product-based business, how much did it cost you? How much does it cost for the product? If you're in a service-based business, you don't have to worry about cost of sales as much. Gross margin, how much is your profit? If you're in a product-based business, how much is your profit? If you're in a service-based business, how much money have you made? Research and development, that is if you're studying the market. If you how much does it cost for you to do research? And a lot of this, within the first few years, you're going to actually be doing it on your own. And then once you get rolling and get your business up and going, you can actually hire out and have somebody do that for you. But just for the intensive purposes of this video, we're not going to go into research and development that. But sales and marketing. Now, sales and marketing, now that's a little different from the cost of sales. Sales and marketing, how much money did you spend on ads? How much did you go to banquets? Uh, if you're in a product-based business, how much did you go to sales, uh, those conferences, stuff like that goes inside your marketing here. So, say you're a salesman and you go to something like a 10X or some type of sales thing that improves your sales, and that's where you want to put that information. If you're in a product-based business, how much Did you shoot for a commercial, Facebook ads, YouTube ads, or anything like that? That also goes into your sales and marketing. And if you're okay, so if you're into service-based businesses, that's going to be the bulk of your expenses is sales and marketing. If you're in a product-based business, that's not going to be the bulk of it, but it is a substantial amount. And these are just general numbers here. Okay, we'll go over the numbers later. General and administrative. If you have administrative assistants, if you have any type of fees or licensing or anything like that. Operating expenses. How much does it cost for you to run your business? Now, that's very important as far as product-based business because you got to add your actual, if you have, you know, sewing, let's just say sewing machines, and how much does it cost for people to use this and that. Depreciation. Depreciation is depreciable assets that you have, such as computers or furniture or anything like that. How much did it cost you to get that? Um, okay, so then your operating income, how much money did you make off the operation? But you don't have to worry about that as far as um, your business plan for 5 years here. Just so when we start up and you're looking for SBA loan or something like that, operating income doesn't really affect you until after year 2 and 3. After that, so your operating income is something like how much you pay your base out your employees, or you have um, somebody doing some work for you and you give them a 1099 miscellaneous or something like that. Finance costs, that's self-explanatory again. Uh, and then income before taxes. So your main thing is your revenue here, your cost, and then your research and development with that much. So for the and for taxing purposes, uh, the first 3 out of 5 years you can report a loss. Okay. Um, After that, if you have more than that, like say 4 out of 5 years you're operating on a loss, they will consider that as a hobby and not a business. So you do have to make some type of profit in order for you to maintain a business. As far as taxing purposes, it would be considered a business versus a hobby. So your net income usually within this is a very generous. So within the first 2 years, you're going to be probably operating at a loss because how much it actually costs you to actually start up. Unless you're in the service-based fee, service-based businesses, uh, you can actually turn profit pretty quick, depending on what services you offer and how much you add. So the main important part about year 2, I went over year 1 here. That's a lot of your expenses are going to be in year 1. Part of your startup expenses. Year 2 is they want to see a little bit more. Um, of actually, they figure you got everything handled within the first year. You got the cost of sales, so everything within the next one is going to be almost um, not doubled, but maybe like 50% increase. So they kind of want to see that's the majority rule. They want to see 50 to 100% increase as far as your 5 year business plan. As you can see right up here, that's what I kind of did. I kind of was generous with those numbers. Uh, that is not the norm there, and I just kind of went off of product-based businesses and and things like that. This is not a service-based business plan, but yeah, cost of sales. Again, you want to increase it at least by 50%. They want to see you make a profit at the end. Okay, they want to see you make some type of profit. 62, yeah. So that's why I always say when you start up the revenue, always put how much you're going to actually pay yourself. I always put that in there because just in case they give you a loan, they want to know how much you're actually going to pay yourself off the business. Okay. Now let's move to the bottom here, which is the balance sheet. The balance sheet is basically your asset sheet and your liabilities and equity in the company. So your balance sheet. Um, so when you go 5 years, when you open again, when I said stress this in earlier videos, is that they want to see you're already in business or already put some money in the business, because they're not going to loan you your money to start your business. They're going to loan you the money if they see you actually actually putting steps forward. You're putting something uh, accountable ahead. So assets. So whatever assets you get, far as equipment, things like that. Not inventory, but like equipment, such as a printing press or anything that is considered an asset. Cash, you always want to have cash, and accounts receivable. Um, how much business you actually got coming in, and then your inventory. So again, these are different versus service-based business versus product-based businesses. These are a little different. Again, this is going off product-based businesses here. So you want to put all your opening costs, so your total assets, your long-term assets, but as far as if you have own stock in the company or you're going to have any stock in the company, your liabilities, how much you're actually paying out, your long-term debt. Your long-term debt is something like your loan. If you went for a loan, and then your current liabilities. Okay, so if you had a loan, then how much you're actually paying on the loan, or how much you're paying the expenses here, how much equity you actually have in the company is basically, if you started with $10,000, 5,000 of its capital, uh, 10 earnings. So add all this up, it comes up to $36,000. So you have $36,000 worth of assets and cash and things at the opening. Now, your cash may go down. They want to see you not have as much cash when you first start, because they figure you're going to be using that cash. Accounts receivable is actually going to go. So then they want to see how much you're actually spending in the first year versus what you have open. So you have to kind of take that into account. So you're going to be using this figure. You're going to be using what 4,000 of it is actually going to be used for buying, purchasing things, and if you have inventory, if you are product, and if you're a service-based business, most of that is going to go on your advertisement and things to get your name out there. Your liabilities is actually going to go down too, because they want to see you paying off your debts, and your equity should go up or stay the same within the first year. Okay, so it should say, as you can see, you got $36,000 for equity and income, but you're spending $30,000 to maintain the business. So basically, you got $5,000 worth of equity inside, surplus, I should say. Okay, and then year two, you're gonna actually they want to see you start gaining business. So again, the rule of thumb is from year one to two, it should be a 50% increase. Okay. Now, with the balance sheet, it doesn't have to be like the 5-year plan income statement sheet. It doesn't have to go up by 50% every year. Okay, because it depends on what type of business you have. If you have a service-based business, it's going to move a little faster than the product-based business, depending on what type of product you have. Because uh, product-based businesses, you also have all types of cost and startup costs, unseen costs, versus a service-based business. You may just have the startup costs initially and then the stuff to maintain the business. But we actually want to, again, year 1 to 2 is 50%, and then you can be kind of flexible and realistic after after 2 to 5. Okay, so how would you figure this amount out? Is remember when I told you about the research and development? You're gonna actually that's when that comes in. You're gonna actually go to year to year to year to year, until you actually have a pattern of how much your businesses tend to make. Okay, so these are projections. So they want to see what your projections are, based on your research and development. And then that's why I said in earlier videos, research and development and marketing are going to be two most important parts of your business and slash business plan, because that's what they want to see. They want to see, basically, they want to see how much business you're going to actually do. So how much will actually need to loan you, and how much are you going to be able to pay back. The thing is, they don't want to loan you the money, um, for the SBA loan, and then you're out of business within the first 2 to 3 years. They want to make sure that they get paid back and you're not under financial strain. So that's why they want you to do the research and development part as well, and as well as the sales and marketing. Okay, guys. So hopefully this video helped you out. Again, do your own research here. This is um, just a template, just a guide, kind of show you what to do far as your 3 year, your 5 year plan, 3 to 5 year plan, and then your balance sheet. Click like, subscribe. We'll see you in the next video.